Well, we're going to just go ahead and get started. Again, my name is Butch Hollowell. I'm the Corporation Counsel for the City of Detroit. And 50% of Detroiters have no insurance. This is an issue that is of the greatest concern in this city, and we're doing everything we can to address that. The Detroit City Charter is unique in that it has a section 9-801, which allows for the establishment of an insurance system after a feasibility study. And so the city, after an RFP process, selected Pinnacle Actuarial Associates to perform the feasibility study. Let me just say a little bit about that. That contract was approved in November of 2014, and we have with me, to my left, Roosevelt Mosley, who's a principal of Pinnacle Actuarial Associates that conducted the study. He's no stranger to Michigan. He's a graduate of the University of Michigan. He's from Saginaw, and he has 21 years of property and casualty experience. He has a sterling resume, fellow of the Casualty Actuarial Society, member of the American Academy of Actuaries. He's also on the board of directors of the International Association of Black Actuaries. His firm, Pinnacle, is one of the largest actuarial firms in North America, certainly rank in the top 10, and they've been a consultant to a dozen states and territories throughout the United States, including the state of Florida, that just adopted a number of no-fault PIP reforms. So with that, I'd like to turn it over to Roosevelt Mosley.
Good afternoon, and thank you for allowing me to share a little bit about the work that we've done with the City of Detroit. Pinnacle Actuarial Resources has spent the last 6 months since being engaged by the city really studying the issue of auto insurance and injuries in Detroit specifically, and also in the state of Michigan. We've looked at a number of different data elements, including insurance claim data, auto injury claim data, medical treatment costs and compensation in the city of Detroit and across the country, including data from the Insurance Research Council. And we will talk a little bit more about the types of data that we looked at here in a moment. But in summary, what we found in conclusion is that based on the changes described and outlined in Senate Bill 288 and the insurance, we believe that it could potentially save drivers in the city of Detroit somewhere between $600 and $2,300 per year in insurance costs. And we'll, in trying to describe a little bit about how we came to those conclusions, I will briefly walk through some of the highlights of the report that we did develop and put together. First, just to give you a little bit of understanding of the data that we relied upon, as I mentioned earlier, the Insurance Research Council does put together a study every couple of years related to closed claim data that occurs throughout the country. Specifically, we looked at data relative to the state of Michigan, specifically to the city of Detroit, and then also compared to other PIP states in the country to get some sense of comparability and reasonability. We also looked at a number of different of data points and a number of different documents related to the cost of insurance in the city of Detroit, as well as some studies and work that had been done by the city and the mayor's office. And specifically, we also looked at premium summary data from the Insurance Statistical Services, a service of the National Association of Independent Insurers. It essentially reports statistical data related to premiums and losses within the insurance industry. Based on this data, we essentially were asked to provide pricing estimates or savings estimates for two primary reforms for the mayor's office and for de-insurance. The first reform was essentially to introduce a PIP limit. Currently, PIP benefits are unlimited in the state of Michigan, and so the first reform really is a combination of both a limit being introduced to PIP costs, as well as a preferred provider agreement, which would allow the de-insurance or the insurance companies licensed with the de-insurance to negotiate agreements with preferred providers to attempt to introduce a limited provider network. The combination of these two reforms essentially lead to the first savings estimate which we produced, which I will cover here in a second. The second reform, which we also priced, was essentially to introduce a deductible into the unlimited medical benefit system. And so that particular reform would essentially be no change to the current system, except for the fact that there would be an option to purchase a deductible on the policy. For the first reform, the introduction of the PIP benefits, we essentially looked at the two pieces independently and then attempted to estimate a combined cost savings for those pieces. So the first piece really encompasses the preferred provider agreement, and that piece on its own we estimated, and there are details within the report which I can certainly cover or provide you with some information on. We estimated that particular proposed reform on its own would result in about an estimated 20% savings. Beyond that, the PIP benefit limits, which were incorporated as part of that option, essentially are a $250,000 limit for emergency and acute care costs under the PIP insurance, and then a $25,000 limit essentially for payable for medical expenses, work loss, and replacement services that would not fall under the emergency and the acute care. And this was the most impactful piece of that particular reform. And the overall impact of that particular reform, combined with the impact of the preferred provider agreement, essentially ends up in a cost estimate of roughly in the neighborhood of 55% of premium. So we would estimate that in total that would save a little over 60% in terms of actual medical cost to the system, which would translate into about a 55% premium savings. One of the reasons that the savings in the PIP benefits end up producing such a significant savings in overall premium costs is because of the significance of the medical component of the premiums in the city of Detroit. There are a number of ways to describe that, but one of the things that we found and outlined in the report is that both the frequency of PIP claims in the city and the severity of PIP claims in the city as well. So the average cost of PIP claims are about double the cost of those same PIP claims that occur in the suburbs. And so when you've got a significantly higher percentage of claims resulting in PIP losses, as well as those losses being about double the average size, when you introduce these types of PIP limits, the potential savings could be significant. The second reform option, which we were asked to price, was essentially to incorporate essentially a high deductible option into the PIP coverage. And so those deductible options, the estimates that we provided were for a $1,000, a $2,500, and a $5,000 deductible option. And the potential savings for these options ranged in the neighborhood of 3% of premium to 13% of premium. The summary document, which you have been provided, essentially has tables of estimates of what these estimated premium savings would translate to in terms of actual dollar savings. And so from this document is where the range of the potentially $600 to $2,300 in premium savings comes from. And again, essentially the actual savings that any any person in Detroit would potentially see would depend on their particular circumstances. And we've included three examples in this document and in the report that try to outline at least the potential range of those savings. The first example is based on the Independent Statistical Service, the data that they have provided, which essentially is a summary of average premiums, both in the city of Detroit as compared to other areas within Michigan. And the average premium described there, the $2,371, is the average premium from that particular source. The second source, and again is described in the report as well, is essentially an example policy that was provided, that was based on some information that was input into an online quoting system, and the resulting premium from that input was the $4,952. And so you can see the potential savings associated with that, somewhere in the neighborhood of $1,800 for a full coverage policy. The last example there was information based on the Michigan the Insurance Placement Facility, which essentially is the insurer of last resort in Michigan. And for those rates, essentially that particular entity essentially insures policyholders that can't potentially get insurance on the voluntary market. And so those rates from an all coverage perspective are a little bit higher, and as a result, you can see that the estimated savings are significantly higher there as well. A significant portion of Detroit residents, based on the cost of insurance and to save money, actually do go without collision or theft insurance. The estimates are that roughly about a third of Detroit citizens currently just buy the minimum required coverage, which is the unlimited PIP benefits, as well as liability coverage. And the second table on the first page there describes the estimated impact for those insureds that only buy liability coverage today. And so you can see that the overall percentage changes in that particular table are significantly higher, because more of the premium that is related to the PIP coverage, and thus the more of the overall estimated savings would be realized as part of that liability-only policy. And so, again, just to summarize, we've looked at a number of different data elements. We've looked at a number of different estimates of the potential reforms. And what we've concluded is that based on the proposed reforms as they are written currently, we would expect that we would estimate that the projected driver savings would potentially be in the range of somewhere between $600 and $2,300. But again, that would vary depending on the specific characteristics of the risk and the specific circumstances of the policy.
Is there anything else, Roosevelt?
No.
All right. Then any questions?
Okay, so let me ask, in all seriousness, if we have a problem if half of those who drive don't have insurance coverage in the city. Is it your belief that if something like this were to pass and become available, that half of that number would buy insurance? I mean, what do we think this reform would mean in terms of that number?
Sure. And while we can't specifically say that if this reform were to pass, then everyone would purchase insurance, obviously, but certainly one of the driving factors in the choice to not purchase insurance is the cost of that coverage, and to the extent that the de-insurance can actually significantly decrease those costs for the citizens of Detroit. I would suspect that many of those driving without insurance actually probably do want to be covered in case something happens. It's just because of financial circumstances or the cost of coverage they aren't able to. And so if this makes it more affordable, then you would expect, all else being equal, that number to come down.
But you don't have any you didn't do any market testing, you didn't do any consumer testing as to, in talking to people, how many people would bite?
We did not do that for the uninsured population, no.
Butch, in terms of, I mean, when you look at this, and you've got medical claims filed at twice the rate and at double the expense, that's the problem. And it seems like we're treating the symptom here and not the problem.
No, the underlying issue is that the way that it works is that, one, no fault is double coverage. So you already have health insurance. We know that 90% of Detroiters have some form of health insurance. 110,000 signed up for Obamacare and expanded Medicaid just last year alone. And so if I fell off the ladder and I broke my shoulder, my health insurance would cover that. But if I broke that same shoulder in an auto accident, no fault says I must buy double coverage. So then you look at the double the number of claims, right, as you just said, and then double the severity of those claims. So 60,000 versus 30,000 on, per 1,000 claims, multiplied by the fact that there is a reimbursement rate under no fault of 300%, as opposed to on your health insurance, which is, if you look at, the Blue Cross reimbursement rate, let's say 8 cents or 9 cents on the dollar, and a Medicare rate, let's say, 7 cents on the dollar, but the reimbursement for auto no fault is 300%. So we can see that, for example, with hospitals that have emergency rooms and you need to have, the most special kinds of equipment, and you have to have, trauma surgeons and nurses on standby. But post-acute, after the, so the 250,000 under the plan covers emergency, after that 25,000, and then your Obamacare or VA or Blue Cross kicks in. But, if you've been discharged from the hospital and you are scheduling an MRI 2 weeks down the road, that 3 times the reimbursement rate, throws everything out of whack. So this does treat the underlying symptom. If you look at what Pinnacle's analysis says, that PIP is 47% of the overall premium. That's that's where the big driver of the costs are, and this goes directly to that issue.
Part of the answer to that question as well is with the preferred provider option. That will essentially help to control some of the potentially control some of the severity of those claims as the de-insurance is able to negotiate those arrangements with health providers and thus potentially achieve some savings on the medical costs.
Bottom line is, after your benefits run out under de-insurance, your other provider can get reimbursed at a lower rate, and there's savings in that. Reimbursements drop.
No. So the way that it works is you have 250,000 for your emergency room care, and then once you've been stabilized and moved to a non-emergency bed, 25,000, and then the rest of your health care kicks in.
Right,
So
and they get a better rate.
the reimbursement rates don't change. All right. So the reimbursement rates don't change, but because you're not paying for unlimited care, that's what drives the rates down for these savings. Is that right?
Now many of the major insurance agencies base premiums on credit worthiness. Will this apply with de-insurance?
Well, the savings that you have here include everything. So if you have a better credit score, then you're going to even see more savings than what the analysis before you shows. So you would see those savings inclusive of what the market provides for today. But if and every driver's a little bit different too. So again, they will be treated based upon their individual circumstances. But the average that you're seeing under the report is the $600 to $2,300 savings. That's an average savings based upon several models being plugged in.
So people with bad credit in the city are still going to be strapped to buy insurance, to pay those premiums, just as they would if they were buying from State Farm.
Well,
That's basically why they don't have insurance.
Well, today 60% don't buy insurance at all,
Right.
right? So what this does is it makes insurance available for people that didn't have anything available before. And remember that it's an option, so that if you have State Farm or Geico or AAA today, you would still, under SB 288, be able to keep that coverage. But if you want to choose this coverage, then you would be able to do so. And we think that offering Detroiters more options is a good thing.
Question for you. Looking at attachment 1, and let's take, say, the first one, therapeutic exercises for strength. You have the no-fault reimbursement, Detroit almost, more than $79, and Medicare 30, and workers' comp 41.57. Is that the double no-fault thing you were talking about? And does that only apply to Detroit? If I lived in if I was in West Bloomfield and had this work done, would I still be paying $79?
Yes, so part of the description that Butch was providing is related to costs such as these, and these are certainly just examples of the types of differences in costs. The same type of situation does occur in other areas outside of Detroit.
It's not just Detroit as a pan.
It's not just Detroit, but there is some. I don't have the exact numbers for the other areas, but there is some variance. In other words, I don't think the numbers outside of Detroit would be quite as significant.
Not my fault, because I'm not, I'm not well schooled in that stuff. It's the same work that's being billed, say, for no fault and Medicare and workers' comp, right? Why the heck is it so much more? If it's the same procedure, same time,
That's an
same
excellent.
skill level of the doctor.
That's an excellent question.
So who's making the money? That goes back to that. Who's making all the money off the insurance?
We have to have the
Somebody's making extra money. Who is it?
I came today to listen to Mr. Mosley. We've been waiting for a long time for this. But the answer is, I was there. I ran the hospital system. There's no doubt that if you look at what's happened, that medical providers are paid 2 to 5 times as much, but on average triple the reimbursement from auto insurance that they are from Blue Cross or Medicare. It goes back to the 1970s when the auto no-fault law was passed, and at the time, hospitals operated on a cost-plus basis. You never heard of a hospital with financial trouble in the 70s, because whatever charges they were, people paid. And so when they passed the no-fault law in the 70s, they allowed the hospitals and doctors to charge whatever they want. As HMOs came in and managed care came in the 80s and the 90s, the law never caught up. So every doctor and every hospital in this state understands this, that if you schedule an MRI for a rehab case for somebody who fell off a ladder and has Blue Cross, you get paid a certain amount. If that person got hurt in a car accident, you get reimbursed triple. Every doctor, every hospital, every clinic in this state understands the difference. And all we're saying is, after your first $250,000 in the hospital, we're not suggesting changing the rate. I actually think the hospitals deserve a premium, because to have hospitals prepared for traumas, you've got to have neurosurgeons and cardiologists and orthopedic surgeons on standby. You've got to pay them a lot of money, even when nobody's coming in the door. So there's a basis on the hospital side for the higher amount. And we don't reduce the amount. We're just saying we'll pay it up to $250,000. After that, it goes back to your Blue Cross or your Medicare or your Medicaid. Once you're out of the hospital, that's always been my problem, is you schedule an MRI for a week from Tuesday for somebody who needs a knee rehab. There's no logical reason why the person who comes in for the 3 o'clock MRI or fell off the ladder gets paid $300, and the person who comes in at 4 o'clock who's in the car accident, you get paid $900. It never made any sense, and it is what is driving these rates. And for whatever reason, Detroiters are going for far more of these treatments at far more expense than suburbanites. And what Mr. Mosley's analysis shows is the reason rates are double for Detroiters isn't car theft, isn't some kind of machinations. The number shows that the medical usage is twice as high among Detroiters, even though Detroiters have the same number of accidents, and that's what it shows.
Aren't we treating the symptom and not the problem? Because if you got this difference between city and suburb, and that's what everybody's so upset about, shouldn't we be finding out why Detroiters file more claims at a more expensive level?
Guy, I will take you down the street and we will count the number of billboards we say.
we see in Detroit. Have you had an accident? 1-800 call this number. Are you in pain, et cetera. There is a whole industry in this community that has figured out how to maximize the treatment. And I'm not saying it's just Detroit. I think there are some other urban areas where the same thing is there. We are treating the problem. When you're capped at $25,000, you're no longer motivated to do it up to $200,000 because after 25, you're going to get your standard Blue Cross or Medicare reimbursement. So we have absolutely gone after it. And the other thing Mr. Mosley points out is we're going to have managed care systems. So once you've been stabilized at the hospital, we'll be able to go to Health Alliance Plan and put folks in a managed care network just as you probably are at your place of employment. I understand the healthcare side of this thing. We have gone, I didn't know the healthcare was a problem before Pinnacle started, but once we saw the problem wasn't car theft, the problem was healthcare costs, we went straight after it. And when he tells you the average Detroiter will see a rate cut of between $600 and $2,300, it tells you we have addressed the problem. Nobody else has put forward any proposal that's come anywhere near that.
You don't think the suburbanites are calling Sam too?
I would
Because
say,
the culture exists.
again, if you look at, you look at the data, it's in his report. The average Detroiter of 1,000 drivers, they have 9 claims out of 1,000 for car accidents, for fixing their cars, collision. Suburbanites, 9 out of 1,000 for collision. We have the same number of accidents. When it comes to medical claims from those accidents, suburbanites are filing 6 per 1,000, and Detroiters are filing 12 per 1,000. So even though we're in the same number of accidents, we're filing twice as many medical claims. And then when the medical claims are costed out, what Mr. Mosley's report shows is suburbanites have an average of $30,000 a claim, and Detroiters have an average of $60,000 a claim. There's no question objectively what is causing the doubling of the rates. Whether it's morally right or wrong is a different question. There's no doubt that's what's objectively driving the rates. Is there any doubt?
So then the auto insurers, to make up for it, they charge more.
Right, go ahead.
Under a cost-based system, that is typically how it works. Insurers look at their costs in the different areas of the state that they write in, and they adjust their rates accordingly to account for the costs that they are incurring in those particular areas. Yes?
Why haven't auto insurers been able to negotiate lower payments in some sort of preferred provider system if de-insurance is going to be able to do that?
Because the state no-fault statute today says that auto insurers are legally obligated to pay hospitals and doctors their charges. The only people in the state today that still pay charges. Charges is a 1970s concept. Today, Blue Cross has negotiated a rate with the doctor what they'll pay. Health Alliance Plan has negotiated a rate with the doctor. The only people still paying charges in this state are people under auto insurance because it's a 1970s statute. And the auto insurance companies do not have the ability to pay anything other than charges unless the providers voluntarily give it. That's been a major source of contention for a while. And so what we're saying is this, that whether that's right or wrong, when 50% of your drivers are being forced out of the system by the high cost of insurance, that's a system that's not working. And so what we're saying is, at least in cities, and Senate Bill 288 now says any city that has 35% of its drivers uninsured could do this, there is now the ability to have a lower cost option. Whether everybody should have it is somebody else's debate. I'm just trying to find a bill that can get through the Lansing, and so we've targeted at the places that are getting the worst abuse. The fairest solution, obviously, is have a single rate that applies to every single person in the state of Michigan. But you politically couldn't get that through Lansing because 80% of the people in the state would have their rates go up, including a lot of people in this room. So when we, for years, the NAACP and others have been trying to do that. When we realized that wasn't possible, we said, all right, here's a solution that doesn't raise suburbanites' rates at all, but it gives Detroiters a different option.
Isn't this going to put a burden on hospitals who apparently would be losing a lot of money?
Yeah, if $250,000 limit, I would say this, you probably have one in 100 drivers is probably going to the hospital in a year. 1 in 100 of those has probably got a bill over $250,000, so you're probably talking about 1 in 10,000 drivers. So the issue is going to be more the post-acute care, the people who are really fighting this. The hospitals haven't been that vocal, but the people who are providing the long-term care are the ones complaining the loudest because they've got a whole lot of patients with Blue Cross and Health Alliance Plan and Medicare and Medicaid, and then they got these car insurance people that pay them triple for the same amount. They're the ones running the ads that you see on TV because they don't want Blue Cross going for all those patients. So are they going to fight us till the end on this? Absolutely they are.
But also health insurance providers are gonna be picking up a lot of slack.
Which is true in 49 other states. I mean, the only state in the entire country that you pay 100% of your medical benefits out of your car insurance premium is Michigan. In all 49 other states, your health care providers do pick up a certain amount, right?
That's correct. Most other states have some either liability limits or PIP limits as well. Michigan is the only state that has unlimited benefits.
So what happens to the medically uninsured if they have the insurance and run out their $275K? What happens to them?
So what happens is what happens in all 49 other states, which is once your auto insurance coverage has stopped, you may well have Medicare, Medicaid, Blue Cross, or some other residual. If you don't, you'll get a bill from the hospital. And hospitals have charity care policies, as you would in the other 49 states. But that's the thing, nothing's free. So in exchange for the lower premiums, there is a possibility that you're going to get a bill. But that's, of course, the decision you make when you decide whether you pay for unlimited benefits or whether you pay for limited benefits.
This is, assuming this is the alternative, and it's a great answer that you believe it is. Long term, what do we all need to do in this state if Detroiters are claiming at a higher rate and claiming at a more expensive and double the expense? Doesn't it also have to be a long-term strategy here to try to reduce that and put us in line with the suburbs?
Again, this does it by being able to put people in a managed care system. We have the ability to start to deal with the care. And do I think that statewide people in auto insurance accidents should be allowed to be put in a managed care system? Yeah, it's what everybody else in the state has done in any other circumstance. You'd have healthcare providers be hard-pressed to argue that once a patient is stabilized at a hospital, that they ought not to be put into a managed care system where their care is coordinated.
That will close the suburban Detroit gap. That's what I'm talking
Right,
about.
that's what we're proposing. Right, so we proposed managed care here. Here's your other question, when you ask, what happens when somebody goes above 250,000? For 50% of Detroiters today, they have nothing. There's not a question about what happens when they're over 250. There's a question of what happens the first day they go in the door of the hospital. And my aggravation throughout this is who speaks for the 50% of Detroiters who cannot drive a car legally because they can't afford their insurance. They're left out of the economy unless they happen to live on a bus line, which in this area is pretty sketchy. They're left out of the economy or they can drive illegally. That's half of our city. Who speaks for them? And Senate Bill 288 speaks for them.
How many drivers, registered drivers do we have? I'm trying to get to that 50% who are uninsured.
Well, we know that there are 322,000 registered vehicles in the city of Detroit.
That's probably a pretty good estimate.
So registered vehicles.
Yes.
So half of those would have no insurance on them?
That's right.
And where do we get those numbers from? Is that?
The Secretary of State's office.
It's 350.
322,000 registered vehicles in the city of Detroit.
Now give me real quick. So we have someone who goes to work every day, maybe makes $10 an hour, trying to pay a mortgage or rent, take care of a family. They can't afford this insurance. You know, law-abiding, never pulled over, never stopped, don't even throw trash on the street. So when they get in their car to go to the doctor's office or to go to work or to pick their kids up from school, they're essentially breaking the law.
Right.
They are
So
breaking.
Right.
they've been made
Criminals. So either you're forced to buy the most expensive auto insurance in the United States, or you've been criminalized. That is where we are in today. That's why we're putting this proposal forward, because Detroiters have to face some terrible choices. We've been going all throughout the city and meeting with community organizations and stakeholders. And there isn't a time when we don't go and they don't say, look, you know, I've got a car that's worth $600 that I got off the lot, and I'm paying $4,200 to insure that car that's worth $600. And for that mandatory coverage, again, you know, this is coverage that you are required by law to buy, and if you don't, it's a $500 fine, or it could be up to a year in jail. If you are, so unless you buy that most expensive coverage, this system makes you a criminal.
So what's different today is this. You have been listening to the debate between the healthcare industry and the insurance industry in this state for a decade. And when the insurance industry says, make these changes, we'll lower the rates, and the healthcare industry says, you can't, how do you know the insurance companies are really going to lower their rates? This is the first time that somebody went out and says, we're not going to rely on the healthcare industry, we're not going to rely on the insurance industry. The city of Detroit hired an independent actuary, the Pinnacle Company, and this is the first independent assessment that you have got that didn't come from either industry that says, here's what's going to happen if you adopt this. And so, obviously, I was pleased to see the validation, because I've spent a huge amount of time in this, but this is your first independent validation on what reforms would mean. And Mr. Mosley and his firm worked on the no-fault reforms in Florida, and the savings actually exceeded what his firm projected would happen there. And I'm optimistic that if we can pass D-insurance, the $600 to $2,300 savings for Detroiters will turn out to be conservative as well.
How long do you estimate it will take for this process to come to completion where people will be able to buy the product?
We'll be ready to sell January 2016. I need 20 votes in the Senate and 56 votes in the House. And if I can get them by this fall, we'll be selling D-insurance by January of next year. But we still got a couple obstacles to go in Lansing.
Where's the biggest fight coming from?
The healthcare providers who are getting paid triple reimbursement for the same care. They're fighting tooth and nail, and they're spending a lot of money.
And what about the Detroiters that say that they shouldn't have to accept second class or second rate? We've heard that from some Detroit lawmakers.
Again, so nobody's being asked to accept anything. You're entitled to keep buying exactly what you were buying. What we're saying is there's an option. As Butch said, there are two choices today. You buy the most expensive insurance in America, or you drive as a criminal. We're saying Detroiters should have a middle option. You can buy a lower cost policy like 49 other states and drive legally. And so the vast majority of Detroiters I talk to want to have that additional option, and we'll see whether we can convince 20 senators and 56 reps to agree with us.
If someone has a head injury or some other lifelong disability and no insurance, then they're out of luck.
Again, so you got a lot of things, but this is the same issue as in 49 other states, but the definition of Medicaid covers anybody who's disabled, so you wouldn't be uninsured. Now, would you get
You have to
this?
fall into poverty to get Medicaid coverage?
Sure, but again, you're saying if you have no insurance, so you're entitled to buy insurance on the exchanges under Obamacare. In the event you cannot afford insurance on the exchanges, there's a huge subsidy from the federal government that allows you to buy them. And if you have a disability, either the subsidy from Obamacare or Medicaid will cover you. And this is what's happening in 49 other states. The only state in America that says 100% of your coverage, your medical coverage, comes out of your car premium is Michigan. The other 49 states are handling this just fine by saying that your regular health insurance provider has some role.
Obamacare, that will be a pre-existing condition after the accident.
That's one of the great things about Obamacare. It's a great proposal. They can't exclude you anymore.
Mr. Mayor, are you confident that you can get this passed?
I don't predict the future. I just work hard. So I was very pleased. Last week, we got it out of the Senate Insurance Committee. First time you've ever seen a reform bill out of a committee. And now we're going to try to progress to the rest of the Senate. And I'm hopeful that having the objective evidence of a nationally renowned company like Pinnacle will continue to make that case. So stay tuned. We're going to continue to lobby for our votes, but we got it out of the committee on a bipartisan basis. We're going to try and get it through the Senate on a bipartisan basis and just keep on going.
This make a safer city too? I mean, in addition to obviously the affordability factor and
You know, you have so many issues. If an uninsured driver today hits a pedestrian, that pedestrian who didn't even make a choice in this doesn't have insurance coming out of the medical care side. If you start to get Detroiters insured now, more people are protected. I think the city and the state are better off when everybody's insured. And so we got to make it affordable so we can get folks insured, and that's what we're trying to do.
Last question, I'm sorry, for me.
That's all right.
You heard him.
Yeah, if you want, I can talk about water rates now.
We have a lot of folks, I know a lot of folks who moved out of the city because of the high insurance.
Right.
And a lot of folks who refuse to move back. They're empty nesters now, but they don't want to move back.
Or they did move back and they're using the suburban address, right?
There you go. How does this help grow Detroit?
That's the whole point of it, is that there's no doubt one of the single major impediments to growing Detroit's population is the unfair car insurance premiums. And if we can cut the rates by basically a third, which is what this report says, it'll go a long way to making Detroit more competitive. So this is part of our strategy to make sure longtime Detroiters are treated fairly and to make sure there's not a financial penalty for you living in the city.
Mr. Mosley, is there, did your study address at all whether having more Detroiters in the pool of insured drivers would bring rates down in the city, or is that not factored?
That's a good question. That particular question, we did not really try to estimate. That essentially would involve estimating who the population of insured drivers are and then trying to estimate what their premiums are. So we did not go that far. One of the assumptions that you can make in that situation is that the people are not purchasing insurance may tend, for whatever reason, to be financially challenged in that area. In other words, they're making those tough decisions that which you talked about earlier. But I can't really say that they're any worse from a risk characteristic perspective or any better. So there really isn't a lot that I can say about what it would do to overall premiums, other than if they were in the system today, their premiums under this program would decrease significantly.
All right, thank you all very much.
Thank you, sir.
Anybody who wants to talk math any further, Mr. Mosley?